how to combine cup and handle chart pattern and Elliott wave analysis for free. We are the monthly chart of Electronic Arts Incorporation, Epic Eco Alpha EA. This is a technology stock that is listed on the Nasdaq 100. And we want to talk about how to combine the cup and handle chart pattern with the Elliott wave analysis for free. All right. So let's start first with the wave analysis, and then we want to talk also about the cup and handle chart pattern. So as I explained to traders before, if we are counting wave, we should refer to specific date also. So in this case, we are referring to the year 2009. So if you have been following us, you should know that as an Elliott wave practitioner, you should know about particular dates that will help us improve or polish our wave account. All right. So here we are. I don't want the video to be too long, so I'm not going to blah 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 blah. All right, if you understand, I'm going to go straight to the point. So at this point in time in 2009, as the stock market began a bullish trend, we will say for this stock probably we will label this a first Elliott wave. The wave count is dynamic because as the price is progressing, things are becoming a little bit clearer. It doesn't mean that our preliminary wave count is useless, but as the price is going up here, the first thing that we are thinking of, that we will say that probably this is the first Elliott wave, okay? Then the price start going down, it came down here, all right? You can see that it almost canceled the first wave. So the second wave almost canceled the first wave. When I see like this, I put a big question mark on this, so I can just put like this on my chart. All right, color it now into like orange to remind myself that this is a little bit strange first Elliott wave. All right, that is almost cancelled by the second wave, because if the second wave almost cancelled, the first wave, it means that there is still a lot of bearish traders out there that are ready to sell the stock, and this bullish sentiment is not as strong as we will expect, because after a bullish first Elliott wave, the second wave should not go beyond the 61.8% Fibonacci retracement level. Better, we will prefer the second wave even to stop at 38.2% Fibonacci retracement level of the first wave. But here it is, it come always here. We will have to go now and check, Google Finance, Yahoo Finance, to see what's going on, why the market did not respond when the stock market was bullish, We have quantitative easing, everything was there for this stock to go up, but it's dragging its feet, all right? So first wave, second wave almost cancel it here. I will put a big question mark. In fact, I will call this as a cancellation, all right? Almost, I'll call this as a cancellation. But let's continue. So first wave, second wave, almost cancel it, give it a bit of chance. Here it is, you say you are in the third Elliott wave. And this third, supposed to be a third Elliott wave, did not even pass the high of the first wave. This is critical. So that's why I say to traders, the most conservative way to enter the third Elliott wave is this, So you will draw your line at the high of the first wave, and you will just wait patiently for the price to break above the high of the first wave to retest it. You will see sometime in the market, a lot of traders are waiting like you. And you will see sometimes the price will do exactly that. Break above the high of the first wave, and then will pull back and retest it, and then you will implement a top-down trading method to take the third Elliott wave. But if you manage to catch it here, that's okay. But if it's coming near the high of the first wave, secure some of your gain or protect your profit, Let's move on. So here we are, we will say they're supposed to be third Elliott wave, couldn't even break the high of the first wave. We will just scrap our wave count straight away and know that this These are not the first wave, these are not the second wave, and we just go back to the drawing board. So here it is, you can see that this one came in and canceled it. This is again one indication that we have more bearish traders hanging around, because we have, you can see that we have a bullish trend, okay, from 1992 all the way to the year 2005 for electronic art. If you play computer games, I recommend that you use electronic art. Beautiful games, all right? Beautiful games, all right? Amazing, all right? So here it is, and you can see that it was bullish trend and a correction. So during the correction, all right, the bearish trader was selling. But as a new cycle is about to begin, those bearish traders know something that probably other traders don't know. They still want to sell this stock. First wave was cancelled, and another attempt here. So if you say this is a cancellation, and you label this one now, they are new first wave, okay, this is another cancellation again. So we need to be very, very careful, all right? So another cancellation. So in fact, after all this blah, blah, blah here, bearish traders still hanging around, waiting to sell electronic arts. Finally, my friend, finally, all right, oof, all right, the bearish traders around mid-2012 are no more willing to sell, because why? They know that the stock market become bullish, and a lot of stock were going up. Technology stock were bullish. Nasdaq 100 was bullish. Google was bullish. Apple stock were bullish. Talking about the market leaders of the Nasdaq 100, all right? They don't want to mess around anymore after this move down, okay? Now we have, okay, the first Elliott wave, this one here. So this is our first Elliott wave, okay? You see now? So by using the reference time, 2009, because we know that the stock market began, okay, a bullish trend, this is very useful to detect what is taking place, so we can count our wave, okay, accurately or precisely. All right? So I'm going to color my first wave in red. So first wave. Here we have a second wave. You can see nice second wave, almost 38.2% of the first wave, healthy. Now we have what? The third Elliott wave, all the way up here, all the way up here. Going to color it also into red. All right. So first wave, second wave, now third Elliott wave. Okay. Where are we now, my friend? Step by step. Let's zoom into it. So now remember that we want to talk about how to combine a cup and handle chart pattern and Elliott wave analysis. So we are starting first with the Elliott wave analysis. Then we're going to talk about the cup and handle chart pattern. We have a cup and handle chart pattern here, and I want to show to you how you can combine that cup and handle chart pattern and the Elliott wave analysis for free. All right. So here we have, okay, so the fourth Elliott wave. Do you agree? Okay, if you disagree, that's fine. We are still friends. Friends can disagree, all right? So fourth wave, okay? All right? Remember, the most important thing when we are counting wave is that we don't want to lose and we don't want to violate the market pattern. And you will be all right. Okay, so now is this the fifth wave? All right, it is the fifth Elliott wave. I put a question mark on that. I'm going to color into pink, okay, for a reason to remind myself, is this the fifth wave? Sometimes you will count Elliott wave. Don't hesitate, okay, to criticize yourself, all right, sometime, okay. So now, as I count this wave, first wave, second wave, third wave, fourth wave, I'm happy up to this point. But now I'm wondering, is this the fifth wave? Now, because if the fifth wave does not go above the high of the third Elliott wave, that's what we call an Elliott wave failure. Is the characteristic of stock that become very, very bearish. That's why I'm saying here is this, okay, the fifth wave, or my friend, are we having, okay, a complex third Elliott wave, okay, a complex fourth wave, 1, 2, 3, or are we going to have a triangle here before the real fifth wave? So don't, like I'm saying in here, my friend, is this the fifth wave? I I'm serious when I'm saying this. Is this the fifth wave? Or are we going to have a complex fourth wave before a breakout of the real fifth wave? But with the information that I have today, all right, I'll leave it as it is, and I'll call this one the fifth wave. But in my mind, I have a little bit of doubt about this fifth wave. Let's move on. So we have finished to count our wave. First wave, second wave, third wave, fourth wave, fifth wave with a big question mark. So if this is truly the fifth wave, we will say that a correction is underway. All right, correction is underway. Probably went down all the way here. All right, all the way here. Okay, and now it's going up a bit. Will it go all the way up a bit to form a flat correction, or will it stop here? One more time, like I said to you, whenever you are counting wave, you are trading a price, and you don't want to lose, and you don't want to violate the market pattern. So at this stage here, what do I mean by that? Okay, do not lose and do not violate the market pattern. So we have a consolidation taking place between the level of 7596. This is about do not violate the market pattern. All right, and you will be all right. You count your wave, do not violate the market pattern. The price is now consolidating between the level of 7596 and the level of 6312. So traders are selling in the zone of 7596 and they are buying in the zone of 6312. If you want to be truly bullish, the price must break above 7596, retest it, and turn around. Okay? If you want to be truly bearish, the price might break below 6312, break below, retest, and turn around. All right? This is about you don't want to lose, and you don't want to violate the market pattern, but you are an Elliott wave trader, okay? So we have counted 5 waves and the fifth wave with a big question mark on it here. Now let's go back now to the cup and handle chart pattern. Now, I'm not going to go into the theory of the cup and handle chart pattern. If you want to learn, okay, more about the cup and handle chart pattern, seriously, go to www.stochastic-macd.com and click on cup and handle chart pattern. Okay, I recommend to traders to check it out at stochastic-macd.com. Apart from everything else that you have learned from the cup and handle chart pattern, I have discovered new things that I think traders should know about, and check it out at stochastic-macd.com. All right. Let's move on. So the price has formed a cup and handle chart pattern here. You can see that this is the cup, you see. Okay, if I color the cup, I'll color the cup now into blue. So this is the cup, you see the cup, and the handle is this section here. This is the handle of the cup, okay? So the cup and handle chart pattern, okay? Now, how can we combine the cup and handle chart pattern with our area wave analysis? Professionals use the height of the cup and handle chart pattern, which is this one here, from the lowest point of the cup to the neckline of the cup as the price break above, okay? The neckline, this is the neckline of the cup, so see it as the cover of this cup. You see, it's like a cup, and this is the neckline here. As the price breaks above the neckline, we project it. We put the height of the curve on top of the neckline to set our initial target. Here it is. Remember what I said to you also, when you set the initial target, you will also set the midpoint target, yes or no? So now you are trading like a pro, yes or no? At least you are adopting the mindset of professional trader. So here it is, you set your target like this, expecting it after the handle is broken, that if this stock is going up, professional will take the first profit here, the midpoint. Here it is. Did they take a profit here? At midpoint? This is the midpoint. This is the midpoint here, okay? They took some profit, yes or no? So you understand what's taking place, okay? They take profit at midpoint. Price came to the initial target. Did they take profit? Yes, they did. You see the bearish candle, okay? The dark green, okay? They took profit again at the initial target. Let me remove the midpoint target. We are talking about how to combine the cup and handle chart pattern and Elliott wave analysis for free. So here, as the price goes above, in fact, we knew that this is the first Elliott wave, this is the second Elliott wave. Now we're using the cup and handle chart pattern to set a target because professionals know that. So they project it like this, they set their target. Price goes above it, they project it again. The second target is here. The second initial target is here. Okay, price goes above, they set it again. Bringing it here. All right? And they're using the height of the cap and handle chart pattern to set the target. Look where, and they project it one more time, that's where the fifth wave and the third wave has ended. Right here it is, using the height of the cap and handle chart pattern. See here, the height of the cap and handle chart pattern. We project it above the neckline. We know first wave, second wave. We want to use the height of the cap and handle chart pattern to pinpoint hotspot trading zone levels where we can re-enter the trade or exit the trade or bank some profits and manage also the trade. Goes above it, we project it again. Here we are using the height of the cap and handle chart pattern here. We are moving on, determining where the professional will make their decision. And one more time, here we are. At this point in time, this is another target point, because remember all these horizontal lines are target point. Now you see it here, you call your first wave, second wave. In fact, if you look carefully, the third area wave is a complex third area wave. So I'm going to highlight the internal waves of the third wave, okay? Here they are, okay? It's quite easy to count this wave. Easy, all right. Did you find this one easy? A little bit easier. All right, okay. And now here it is. Our third area wave is subdivided into 5 manner wave. 1, 2, 3, 4, 5. No wave violation, no area wave principle violation here, forming the third area wave. And then we have this pullback. That's why I'm calling this the fourth wave. But we have a question mark because the fourth wave can be also prolonged, which means you will see a consolidation for some time and then boom, up. So we are here now using the height of the cap and handle chart pattern. If this is a complex fourth area wave, all right, if this is a complex fourth area wave that is prolonged, where is our fifth wave likely to end? Okay, suppose this is not the real fifth wave, and this is just, a consolidation that is taking place here, that is a prolongation of the fourth wave. Where will the fifth wave end? Okay. Here we will use again the measuring stick of our cap and handle chart pattern, and we project it above this line, setting the end of the fifth wave in a zone of 8878. So the next level, if the price found a support above 7596, remember what I said to you, no violation of market pattern is now consolidating here. All right. If it breaks above 7596 and find a support, we implement a top-down trading method. The next target, in that case, we will say that, okay, this was, remember, the wave count is what? Dynamic, step by step, okay? So that's why we put a big question mark on this fifth area wave. If we break above this one, we will say, all right, probably. Two things can come into our mind, remember. Either this is truly the fifth area wave, and we are having a flat correction, okay? So we may say, probably, so we have 1, 2, 3, 4, 5, a pullback. Now, even if it goes up to 8878, all right, we may think, okay, probably it's a flat correction. Say expanded flat correction, or is it a fifth wave? Now you will say, George, I'm confused. Don't get confused. The reason why you don't want to get confused is that you don't want to lie to yourself when you are counting wave. You want to see from different angles. So you are holding it horizontal, you are holding it vertical, you are turning it around, upside down, trying to see from different angles, so that you don't miss anything. And also, you want to go into the mind of other area wave traders, all right? So you may know exactly what is likely to take place. By using the height of the cap and handle chart pattern, if the price breaks above the level of 7596, professional will set a target at 8878. That's for sure. It's very important for us to know the key levels. Using the cap and handle height, we can determine those hotspot trading zones, so we can be ready to make excellent trading decisions. As you can see here, the third area wave has ended here, a pullback to the edge of the previous okay, profit target level. You see here, pull back to the previous profit target level, went back again to this target zone, pull back again near the profit target. Look at the tail of this candle. All right. You see how the height of the cup and handle chart pattern has helped us. So the price did, you can see this one went a little bit too far, but quite close again to another initial target zone. So by using the height of the cup and handle chart pattern, you can navigate through this messy market using the area wave analysis and the cup and handle chart pattern. So see here, drop it down, you know that there is a key level here. All right. Here it's going up, you know there is a key level here. If it breaks above 7596, here it is, you know that there's another key level at 8878. Do not forget also the midpoint. I don't want to draw it, but there is always a midpoint between two initial target, a midpoint target. If it goes above 8878, well, my friend, we will project it one more time. Are you afraid? This is your chart. Draw on it. So the next target will be 10057. 10057. It makes sense? It is also powerful. This is about how to combine cup and handle chart pattern and area wave analysis for free. All right? If you have any question, okay, put in the comment section. You have any suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to combine cup and handle chart pattern and area wave analysis for free. Speak to you soon.